Hello, my name is Steve Bigelow with the Candlestick Forum. The uptrend remains in progress. As we can see in the Dow, it has maintained above the T line and now broken out into new high. Could be another wave one, wave two, going into wave three. Same time, after our best friend signal down here, our double doji pattern setup on the NASDAQ that gapped up, giving you a best friend signal through the T line, gapped up again through the 50, gapped up again through this level. When they start gapping up and we're not even in the overbought area, that usually gives you a high probability expected result of much more upside. So with the upside occurring in investor sentiment, we can pick out the strong sectors. The steel sector, BBL, one of the steel mining companies, did a gap up the other day, stayed above the T line. Expectation was heading up here to the 50-day moving average. It's eventually gotten there. If it goes through this level, because we're still not in the overbought area, after the initial gap up, followed by a best friend gap up off the T line, if they go through the 50, tells you there's strong bullish sentiment coming back up here to fill this gap, giving you a good strong upside potential. The steel stocks just continue to stay strong after they've done these buy signals, breakouts going into wave three. The McMuffin pattern is showing up. McMuffin patterns is very simple. A morning star signal followed by a doji sandwich, or your morning sandwich, your McMuffin, obviously is not a Japanese rice traders terminology, but it gives the illustration or the demonstrating that if the morning star signal was one of your strong candlestick reversal signals, expecting more upside, and a doji sandwich has a expected result, more upside, when you combine the two, you get much more probabilities that you're heading in the right direction. This type of signal, especially occurring at levels that everybody's watching, gives you the opportunity to get into trades correctly and or getting into option trades at the appropriate time. This is the type of thing we're going to be demonstrating this coming Saturday for a full day training on how to use the appropriate candlestick signal patterns to apply the best option strategies. And again, these are not difficult option strategies. They're a combination of buying calls or puts, or buying spreads or selling spreads, all made very simple. So anytime we see signals that give us high probability setups, OI, produce the inverted hammer. The inverted hammer is one of your 12 major signals. It's the less frequent of all the 12 major signals, but there's a very simple statistic. If it opens positive after the inverted hammer, you've got a 95% probability or greater that you're going to see an uptrend. You can see wave one, wave two, now going into wave three. So as long as the indexes continue to stay not only above the T line, but all are in the breakout areas, expect more upside. That's what's going to make these candlestick patterns that much more profitable during this uptrend. That'll be it. We'll see you in the chat rooms.